Hello, traders. It's Monday, the 7th of May, 2018. It's 8:01 a.m. here in Chicago, 9:01 Eastern. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market is solidly making gains today. The Nasdaq's up 0.5%, 34 or 35 points from the settlement of Friday. The leader, however, is crude, benefiting from a battle between Iran and Saudi Arabia, disagreement on supply and what the price of crude should be, and buffered by Venezuela's just terrible situation. The DAX is up 98.5 points, up 0.77%. The laggard today is the euro, the Japanese yen, and gold, as the dollar gets stronger and stronger in anticipation of further interest rate rises. And so this morning we're trading just on the edge of the gap in the ES, 2670 being a key figure, and a week high from 2669.50 on Friday. So overall, looks like allocation is to risk. However, not by much. We're just on the edge, as I said, of Friday's range. Let's take a look at what we expected Friday versus what we got. Friday's expectations, I would say, were very muted. Nowhere near what actually happened. The market, as you recall, NFP came in lower than expected. The expectation was the market would open in range, go sideways, and sell off. Usually, non-farm payrolls has pretty good movement in the first hour, and then it just dies off very quickly as positions by the higher time frame are set, and then the weekend starts. Friday was definitely an exception in terms of non-farm payrolls for it to turn into a big trend day. The volume was a little bit lukewarm relative to what we would expect from the past, but it did rally pretty strong. So the primary expectation was for it to sell off, and that was way off. The secondary scenario is a drop and a pop to 2640.50 and to hold in balance into Thursday's point of control area, to hold steady around the 2627 to 2630 area, way off again. And scenario 3 is the market's not able to sustain the current valuation and starts to move lower to continue the move from Wednesday into Thursday. No go. That did not happen at all. So needless to say, Friday was not a day where I actually put on a trade in the ES. There was just, I don't see the point of trying to battle a trend. Here's what actually happened on Friday. Oops, I reset my charts so my opening swing high and low are not in the right spot. When the market does this, and it does this a relatively small amount of the time, there's nothing for me to do. I'm not a momentum trader. I'm not a trend trader. The market's in a trend or is out of balance, depending on how far back you look. Anywhere between 18 and 28% of days, the ES, by market, I mean the ES. And so I generally don't have a very good plan for these days. I don't shift gears and become a momentum trader when this happens. I also don't have a way of anticipating that this would happen. Sometimes I can with an open out of range and a clear, solid participant early on. I can anticipate the potential for a move. But as you can see here, the counter rotations were very poor. The opportunities to get long with a defined structural risk limit versus a preset risk limit we're just not there. And so it's not my kind of trade. And if it's not my kind of trade, since I'm trading on probabilities and I'm only trading when I see a clear edge, there was no trading to be done. Friday was clearly a P-shaped day. It was a trend day profile. We have a big short liquidation, short covering day where the market runs and then it finally finds the counter force, the counter participant, and then holds steady at the high. The thickness of that volume, look at the volume from 2644 all the way to the high, reminds us of the profiles we've had recently where it seems like every price is seen as valued as value, and so you have a lot of trading occurring across a multitude of prices, and as opposed to a market that pushes up and actually gives us a normal distribution. This would be a normal distribution right here. This market is giving us a push and a sort of a blunt distribution. There's the good news is there's a lot of disagreement on what value is, how to price the Sino-US trade disagreements. Trade disagreement. There's the issues with the price of oil, non-farm payrolls not meeting expectations, and of course the market is very, very, very interested in what the Fed will do. Given the lower non-farm payrolls, the market is, if you remember, the reaction on that release, on the unemployment release, was actually higher before it sold off and then came and recovered, came all the way back. So the market's anticipating that that's good news, that the unemployment, the non-farm payrolls came in worse for April than anticipated. This is the impetus for the Fed to slow down. And so that's what we immediately price in. So the why is not really all that important. Whether this rally was created by fresh buying or short covering, shorts who had to buy, doesn't make one bit of difference to us because there were both buyers. If I were short, say, 30,000 contracts in the ES as a fund or whatever, and I'm covering, I'm voting that the future pricing, the future valuation of my ES contracts in my time frame is likely to be higher. That's basically the same reason someone would initiate a buy. The third force, the sideline people who step into the market with fresh money, that's the reason they would get in. They would get in because they believe that in their time frame, whatever that is, future prices are likely to continue higher. And so, why? I get messages asking, why did this happen? What's this rally? What's behind it? It doesn't matter. It really does not. If you want to argue a case for fundamental trading, then you're in a league of your own, and that's something that I cannot speak to. But overall, we know that the market's pushed higher. We know that the market was trending, which means that it was completely out of balance. We had very poor counter rotations. We can't even call this a normal variation day. So it's a one-sided trade. And so the market basically is pushing to find the opposing side. It's pushing as high as it needs to, and it continued to do so overnight. It's pushing as high as it needs to in order to find sellers. That's its job right now. Or that was its job Friday, and it continued to do so today. The overnight session pushed higher and has been sitting sideways. Mostly we do have a little stem to this profile, and then we have balance above it. We have pretty good kurtosis, pretty good volume so far. We have standard or what we would expect to be the most common volume for the Globex session. This being done with the UK being on holiday. The UK markets and banks are closed today. So pretty good participation for a holiday in a major market. Holding near the prior day's highs, holding above mid, right around the point of control, above VWAP, the overnight VWAP, and above the prior day's range. We did leave a very poor high on Friday at 69.5. We did have a pretty good delta going into the rally on Friday, although quite a bit of it came off right at the close. In the last about half hour, we dropped about 50% of our delta. Volume aggressors were balancing their books into the close, and that's what caused it to push down 12.5 points into 26.57 before it closed at 26.63.75, right in the center of that. So not much to glean from the overnight session other than they like these prices. So going forward, not much to impact this. Looking at, for example, looking at the week, looking at this week, like I said, today is a UK holiday, but the numbers are kind of sprinkled across the days. PPI core comes in on Wednesday. That's going to be important. And then the Bank of England makes a rate decision on Thursday. US CPI monthly budget come in on Thursday. And on Friday, we have import prices and University of Michigan. So the week is not all that busy with big numbers. Again, we'll pay attention to PPI and CPI as that impacts Fed rates. But overall, pretty standard week. Looking at what we intend to, what we're likely to see today. Now, remember, when the market runs in a single direction without rotating around itself, it is not actually testing and retesting areas for participation on the others from the opposing side. And so rally days tend to lead to a market that folds over around itself somewhat to retest the participation in those areas below that it kind of blew through. It's kind of like having a gap. And so let me turn on my stock zones here. And so this area here is very crowded. You look at these stock zones. These are areas that I'm looking to engage the market if I have a setup. These are the areas I'm looking to engage, those gray bands, stock zones. You look at those stock zones, and they are tight together. These stock zones here are going to force me to have to scale in a wide range. The top of the stock zone is like 26.58 or 59. The bottom of the stock zone is 26.53. 6 points of range between those two bands. So anticipating a lot of noise today. We're likely to open an open auction. We have a good chance of falling in the next 10 minutes back into the range. But if we get an open auction, I'm expecting it to test lower, consolidate, and then I'm expecting the overall participation to be to the downside. I'm looking for an impulse down and a battle. Excuse me, and a battle in this area. Sorry, I had to clear my throat there. A battle in this area before we move back into balance. I'm anticipating a double distribution profile by the end of the day. On scenario number one, this is a mean reversion scenario, moving lower. And the reason I'm looking at this scenario is I'm looking at the bigger picture on the profile in the balance in this area. And my expectation is we're likely to roll over somewhere around 26.75 and push back into the accepted prices from Friday. If we don't do that, we have a scenario that pushes lower into the close, consolidates, impulse up, and then consolidating with a skew upwards, and that's scenario 2. Scenario 2 has a target of 26.8275 up here, but overall, I'm going to have to sit out the first 20 minutes to a half hour to see what the intent is and what the bigger participants are doing, if they even participate today. The tertiary scenario is an open test drive down. And if we do get an open test drive down, this is the better opportunity. I expect it to bounce in these stock zone areas and retest the point of control below and get back into this single down here at 26.43 before it bounces. This scenario has the best opportunity for trades today, and if I do see it, excuse me, if I do see an impulse down early, I am going to get aggressive about getting short through this range, through this entire range, back to Friday's mid and into the 26.41 area. Okay, the key LVN down here is 43. So those are the three scenarios. You know, it is Monday. You want, believe me, you'll want to make sure that you've got your risk plan straight. That means how much am I risking based on my account size? How much am I risking per trade, and how much am I risking per day? If you have a $200 per trade risk and a $600 per trade day limit, it does not mean that it takes 3 trades for you to be out. It may be 5 or 8 or maybe 3, but it doesn't. At least you have some sort of a limit when that tells you that you're not in alignment with the market. It's really important to have that. So start your week properly. The second thing is, know what your numbers are, know what your performance is, know what you're going for this week. What part of your performance are you improving this week, so that you can measure it at the end of the week and make sure that you're winning the week. You're getting something for your time. You're getting something for your losses. If you're not, then you're here for entertainment purposes. If you're serious about improving and keeping up and being part of a dedicated community, I suggest you hop on to convergenttrading.com. I'm going to talk about it more and more because I believe that it's what traders need. I would urge you to check that out as we go week after week after week. We have sessions where we discuss some important areas that you need to develop that may help you recognize what truly what you need to focus on. Convergenttrading.com. Good luck today, and I'll catch you tomorrow. Take care.